Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for Monday, the 1st of June. Hard to believe we're there already. 2020. I've been landlocked in my house for, 3 months now? Wow. All right, my friends. I was surprised that the stock market was up today. I understood the lower opening. I saw last night when I went to bed, which I don't sleep that much, but I did go to bed, and I saw the market down. I woke up and I saw the market coming back, and it spent the day coming back. So what's going on? Well, I think the market's looking over all the events, that's the word I'm going to use, taking place in America and actually North America. And with all the unrest that's going on, the market is probably looking at that and say, okay, but in the bigger picture of finance, cities are opening. They're delayed a little bit when you get this social unrest, but they will open and they're going to open. Factories are humming again in different parts. So you've got to look at the events. I know what the news does every night, and I'm watching it, and it's terrible. And I'm living in a city with National Guard. You can't even go anywhere. Even the grocery stores are closing 5 o'clock. I mean, this is Chicago. Forget it. Everything's locked down. But the market is looking at something else. Now, be aware that you could get that old Monday rally in stocks in the Tuesday break. But what I liked today for the metals was I was looking at the dollar. And the dollar's been breaking down and trying to get a breakout to the downside, which should be somewhat supportive, I think, to the metal markets. When we take a look at a weekly chart of gold, during this whole time from the peak here at 1750.630. Now that peak was made the week of May 15th. So, I don't want to give you the impression this is weeks ago. It's not, it's a couple of weeks. That's all it is. But the market's only $20 off that high close. That to me is important. It's not showing that it has momentum to the downside. When I look at what's going on, I think we can define a trading range right now. Seems to be the 1700 level up to the let's call it 1790 to just round it out, back and forth in there at this point. The market stepped out of a downtrend today. Now, what do I mean by that? Let's go back to last week. This is Thursday. You had a clear pattern of lower highs, lower lows. I picked Thursday because that was the last day that I did daily charts with you of last week. Then I went to the weekly charts. Friday, the market picked itself up, got up to 1754.50. You still have to take out this high, and you did it now. So the fact that the market's taken out that high ends a lower high, lower low pattern. Where's the market in relation to the 18-day average? Well, trading either side of it, a bit up, a bit down. I think you'd agree with that. Back and forth. You only spent 3 days under it, and now you've got 3 days over it. But I don't like that we don't have a pattern in here of a trend. We broke the downtrend, but we haven't started an uptrend. Where else are we? Well, you're sort of caught in the Bollinger Bands. While I said 1790 trade top, it's saying 1773 to the 1708.60 level in the bands. So those are the restraints on the market. There's no magic there. If it wants to get through them, it can. But 95% of the time, you're going to trade within the bands. So the first challenge of it, upside or downside, is likely to be a resistance and a support zone. When we take a look at slow stochastics, the momentum had been pointing down. You see that right through here last week. There you are. This was Thursday again. Now the market starts turning itself back, and now the momentum has turned itself back up. So we have the bias up, no trend on the swing line, and we have momentum trying to pick up a little bit. In the gold-silver ratio, it still favors the silver. So the market's come back from this, it was up in the 125 area. It's given back quite a chunk of that differential. And as you can see, silver's got a fully embedded slow stochastic reading. It's got a pattern of higher lows, higher highs. So the trend is up. I think there's a lot of people under the market probably wanting to get long this market, but it's moved away from them. We'll have to see what happens. So I was reading the inflows into the silver ETFs, and it's very, very large. So you're getting a lot of inflow into that. In the copper market, we're up at a key resistance area. We're back to the upper Bollinger Band in black. The green line's the 100-day average of closes. And what the market has done is each time it's hit in the past this Bollinger Band, it's sold off. It keeps getting back to that 18-day average, as you can see. And it doesn't try the lower bands, it's been trying the upper one because the market is anticipating China's going to need more copper. Other parts of the world are going to need more copper. The situation probably stop some copper production, so supply may not be as tight as you think right now. It could get, in other words, not as large as you think, could get a bit tighter than you think as the mines have to come back online when they get the demand. In the platinum market, here like gold, if we go back to last week, you had this minor downtrend on the swing line. You never closed under the 18-day average, so you never had the downside bias. The market played a game at the 100-day average. 832.40 was the 18-day, and as you can see, the market has been rejected. So there are times when you have to pay attention to a resistance number, a moving average, that becomes support on the way down, and you'll hear me regularly point that out here. In the palladium market, it's the opposite. It's the 100-day average and the Bollinger Bands that have offered the resistance. The market is still in a swing line downtrend. It's got to get up and over 2033, or I think that's even higher than that. It's got to get over 2050, 330. My line was right over it. My eyes are good. I just couldn't read it there. Over 2050, 330 to negate it. But what it's really done is it's gone back to the 18-day average to play around. And one of the supporting factors to the metals has been the breakdown in the dollar index. Now, what the dollar index has done is it's broken out of this sideways pattern. I call this a pipe. And if you think about it, that's what you were doing. You were trading sideways. Then you started pushing on that pipe. Now, I like to see two low closes at the end of day's ranges lower than that. You didn't get them yet. That's not that it has to be that way. I'm still going to call this a breakout to the downside, and I'd be wrong if you got over the 99.95 area, but that's going to take quite a bit of doing from here. This market kept playing up at this 100 area, and it's a failure now, and you're under a key moving average, so I view the dollar as having a negative part to it. You know, I know a lot of you like to trade the GLD, the GDX, the SLV, all the other metal parts and components. Well, I don't know if you're aware that besides the futures updates that I do for my subscribers, I do a complete one in the afternoon for my SPDR ETFs, and I cover all that. I'm up to about 34, 35 charts now, so we have to redo our ad. We just keep adding to it, and I'll probably get up to a number of 40 that I'm comfortable with, and that's where I start. So at first it was 27. Forget that. I've added probably 4 or 5 charts already on a daily basis, and I keep doing that as the time is allotting me, and we're getting more comfortable with everything that we've got through here. So I give you ideas about it. I prep you in the afternoon for the morning trade. Ideally, and the word is ideally, you're taking the morning futures video. And the reason is, whatever I'm seeing here, you do understand that barring the spiders, all these other parts of the market are going to look at the futures market overnight for their opening. The spiders are the sectors within the stock market. These are based in large part, other than the miners obviously, they're based in very, very large part on what the futures prices are doing. So I look at that. I'm covering way more than the TLT now. I'm covering more energy. I've got UNG in there for you. So I keep adding away. If you'd like to try this out, if you'd like to subscribe, either way you'd want. We offer trials to it, and of course we offer a subscription to this. Now, how do you get to that? Go to our website. Under free offers, you can get the trial if you haven't had a trial. We keep a pretty good record of all this. If you have had it and you say, you know, it's time that I join in on this, all you need to do is go to the website. Under the word research, you'll see my SPDR video. You'll see my morning subscriber video for futures. Choose what you want, and away you go. I'm Ira Epstein. Look forward to seeing you tomorrow. Have a great trading day.